Hey, good afternoon, everyone. Welcome to our 2021 Global Economic and Trade Forecast. Glad that you all could come today. Today, what we're going to be doing is taking a look over the next year and also talking a little bit about what we have coming up for our International Business Accelerator. You can also put questions into the chat. We will take them at the end. This presentation will probably take about 35-40 minutes, and then we'll have the rest of the time for discussions. This is a particularly auspicious day for this presentation. It certainly marks the dividing point in policy-wise, particularly in the United States. And so we're going to be trying to also factor that in as we move ahead over the next 40 minutes or so. So first of all, what I'd like to do is to introduce our team. Many of you know me, and my background is as a State Department economist. I still teach economics, and I also teach international business at Golden Gate University. I'm also like to introduce my colleague, Michael McClune, who's been working with me for the last going on now 4 years. And what we're focusing on is developing this International Business Accelerator. Michael, you want to come in and say a few words?
Sure. Hey, Chris, can you hear me okay?
Yes.
Great. Yeah, thanks for coming, everybody. We had a great 2020, despite our 19 projection of an economic downturn, and that was pre-COVID, of course. We had some great programs in Latin America. We have some exciting new clients from Korea, and of course, we continue to help U.S. companies export. So excited to work with everyone here in 2021. I'm going to put in the chat an exciting project that we did late in the year. We partnered with the U.S. Commercial Service, International Trade Administration, Milken Institute, LMU, and some other of our esteemed partners to put on a global startup. I'm sorry, it was the Startup Global SoCal series. It's 6 events, all videos, and I'll put in a link there with a link to the resources and the tools and the tips and the tricks. Easily worth hundreds of thousands of dollars for any company that's looking to grow globally and grow out their strategy to be an international powerhouse. So again, thanks for coming, and turn it back to you, Chris.
Okay. Thanks, Michael. What we're going to do the approach today is because Michael was talking about all these opportunities, but you have to put them in a context. And the context is, what's the world economy going to be like? So what I've developed here today is a listing of the major forecasts by the major organizations that do that, both international institutions, as well as some banks and other advisors, business advisors. And then with each one of them, I'm going to be talking about particularly what are the implications for small and medium-sized businesses that are doing cross-border business. All right, so let's talk about, first of all, the overall picture at this point. Most everyone agrees that it's going to be a year of recovery. 2020 ended up being, it was the unforeseen events. We had talked last year at this time about a slowdown, but the unforeseen event was something that was truly unforeseen, but black swan events do occur. And in one sense, although it was unforeseen, it wasn't unpredicted. It certainly has been many warnings out there for many years, and we just didn't adequately prepare for them. So we have at looking at the general world consensus, the IMF and World Bank, or IMF is definitely a bit more optimistic than the World Bank. OECD coming in somewhere in the middle of it in terms of their production. On the private sector, Morgan Stanley's projections are definitely the most optimistic out there. And it's based on a swift recovery in developed economy markets, as we'll see as we go through country by country. But there are still many uncertainties in this, and that is what's the vaccine rollout going to be. In the United States, in Europe, in Japan, other countries, and most importantly, what's going to be happening in developing countries. It's going to take longer to get rolled out there. There are a number of promising vaccines that are one-shot injections that can be dealt with at more reasonable temperatures than the Pfizer and Moderna vaccines. But it's going to take time to get them. We're going to have, immunized, 5 billion people, maybe 4 to 5 billion people, to really gain what the epidemiologists keep talking about is herd immunity. So that's going to be a drag on the world economy, on consumption, on travel, tourism, all those areas for the coming year. Let's look first of all at the United States. Most of the projections are coming around in the 3% area. Again, Morgan Stanley is the one that is the optimist on this one, predicting a very robust recovery. And certainly if all things go right, that's certainly well within the possibilities at this point. But I've listed down here some 5 different things to be thinking about. What's the timing of the vaccine rollout? We're running into problems. It's running slower. I think these will be worked out. And certainly there's a lot more attention to the detail on the Biden administration, which will take over tomorrow. Another question is whether there's going to be a third fiscal stimulus bill. Certainly, President-elect Biden has proposed this in his 1.9 trillion COVID response proposal, and but we'll see how much of that gets through the Congress. I think it's likely there'll be additional monies. What it will look like if it gets through the entire process will be one that's many more question marks. I think the one big change, though, is that the Biden administration will resume the role of the United States as a global leader. Certainly the Trump administration has been America first, but that goes into all sorts of areas, not only in terms of international organizations, everything from NATO to groups like the World Trade Organization, all the way over to technical organizations like the World Health Organization. The United States will do its attempt to resume the role of a global leader. It's going to be more difficult. It will certainly take more time to do that over the next, it won't be something that will be overnight. It'll take probably several years to do that. From everything I've seen there and looking at what's going on is that there'll be fewer major trade deals. And I guess what I would mostly characterize this, that there'll be a lot of fence repairing with the allies. We're trying to get things back on track with our neighbors in Mexico and in Canada. Certainly with the European Union and the other developed economies. I think there'll be also a greater emphasis on developing economies, particularly in Latin America and in Africa. We've been at the International Business Accelerator working on a number of initiatives in Africa. As we get to later, we're still very bullish on that region long term. And the extra attention to it will certainly accelerate that process. The big one out there is China. What's the strategy going to be there? I think Biden administration, from what I've seen so far, will be coming and have a slow approach towards China, trying to develop a strategy. It will not be rolling back tariffs immediately. It has them there. We will probably be using them to develop some bargaining leverage at the negotiating table. We have a very, very adept USTR designate, Catherine Tai, who comes over from the House Ways and Means Committee, where she was the China expert. She has native Mandarin, and so that will certainly be a change. And it will be interesting to see how the Chinese react with a Mandarin-speaking woman on the other side of the table from them. Speaking of China, China is in for a really robust economy. Most of the consensus is around an 8% recovery this year. And it's the first out of the gate to recover. It did the best job of controlling the virus. Draconian measures that probably could not have been reproduced in any of the democratic regimes around the world, but it did it. Now, the question is the economy overheating at this point? You've seen over the last month that the renminbi is appreciating. That is a decision by the Chinese government, and it generally means that they're trying to cool the economy. Traditionally, what the Chinese government has done is focus on monetary policy, particularly their reserve ratios. And that's kind of the sledgehammer approach, as I always tell my students in my economics classes. But this one, allowing the currency to appreciate, which makes their exports less competitive and imports more competitive, is certainly gives the rest of the world a little bit of breathing world. But it also will probably accelerate another trend, which is that China is becoming a more and more expensive place to manufacture at this point. I think that what you will see is that there will be continuing tensions with the rest of the world on trade. China will find it more and more in their interest to conform to the international norms that are out there, to be more compliant with WTO. We complain a lot about intellectual property theft, and yes, it is a very real problem with China. It is less of a problem than it was a decade ago. They still have a long way to go, but that has changed because they saw it was in their interest to do so. And lastly, one of the things I keep pointing out, and I'll point this out with a number of the other countries that we'll be talking about, there is a demographic headwind. The one-child policy is going to result in is already slowed in a slowing of the economy, of the population growth. More importantly, it has resulted because of the preference for male children over female in a major overhang. There's something like 10 to 12 million more men than women in the 20 to 35 childbearing age. That's a lot of extra testosterone running around. And it's going to certainly have a lot of implications, not only for their workforce going ahead, also for their social problems, and also it will have a major impact on their future expenditures as the economy is rapidly aging. Starting next year, the average age in China will actually be higher than that of the United States. So that's long-term is the challenge for them. It's the demographic headwinds, and it's the fact that they're becoming a more, higher cost production center. So that means they'll probably shift to other kinds of production that are more upscale production. So there's a lot of room there, but it will require a lot of adaptation by the government and the government authorities. Japan. When I first got out of college, my first job was with the US Trade Representative. And at the time, the obsession was with Japan. All the words that you hear today about China, you could simply pull out that word China and replace it with Japan, and it was the same rhetoric. And since the early 1990s, when Japan hit its demographic wall, the population has slowed. It is now actually, there are fewer Japanese every year than the previous year. And so that's had an impact on their economy. What they've been exceptionally good at is incremental innovation. And because of that, you can see that they're going to have a relatively solid recovery. They're still very, very competitive in manufacturers, particularly advanced manufacturing. They're certainly getting into robotics, and they've been there for a while. Fantastic advances there. Artificial intelligence, you'll see more kinds of innovations coming out of them. You can see that because of that, they're going to have a good recovery. I want to note there that they will likely be willing to join a Biden administration in sort of coordinated fiscal and green initiatives. So that's certainly one thing that we should be looking at for Japan this year. Japan will be there. It will continue to have incremental innovation, which is how they approach things, which they are exceptionally good at. But their labor force and the lack of workers, frankly, and the older population will keep their growth in the long run at these 1% to 2% levels. The Eurozone. Now this is the Eurozone minus the UK, and the pound was never part of the Eurozone in any event. But looking at continental Europe, it's kind of mixed predictions on there. So we'll see that we have the IMF and Morgan Stanley being particularly interested in that. Plus also there will be moderate growth. We'll see a lot from the developing countries of Eastern Europe. They'll continue to do well. Germany will be slower than these average for most of the projections I've seen, but it's going to have a very solid recovery. Again, the Germans do exceptionally well in terms of innovating and on the manufacturing sector. You will probably see a lot of coordination between the United States, Japan on fiscal and green initiatives. It's good. They'll have everybody pulling in the same direction as that. The recovery will depend a lot on the vaccine rollout in Europe. So far, they've been doing a little bit better than the United States. There's certainly a long way to go, but you're not going to see a real recovery in the tourism sector, which is a large part of Europe's not only import sector, export sector in the sense that it brings money in, but also from generating jobs internally. So we'll see from Europe a good recovery this year. And it's one that will be, there's a lot of question marks on the role of the recovery, particularly as it relates to the vaccine. So a question about the United Kingdom. And there are a number of differing opinions on it. The IMF is certainly very bullish on it. The OECD is less so. The World Bank has actually surprisingly not made a prediction on it, calling it previously part of the Eurozone. But at any rate, there's a lot of uncertainty. They're very much in the depths of the another COVID wave at this point. They're really working hard to get it under control. The vaccine will come along and will certainly help that. But the question is, what after Brexit? And the Brexit resolution will reduce a lot of uncertainty in the market. They still will have duty-free access to the continent, but there will be a lot of adjustments in terms of paperwork, shipping documents, ways monies are transferred. There's questions about how much the UK will still remain the financial center of Europe. There's a lot of indications, a lot of that could be shifting to Frankfurt. There's another question, particularly I see Stephen Keat here, a good Scotsman, the question about the Scottish, they are having a referendum, next year on where the union will go with the UK. So there's a lot of uncertainty on the political side. There's been a lot of talk, and there was a lot of initial hope by Boris Johnson on trying to get a US free trade agreement. There's a lot of issues that have to be resolved, and they're mostly in the agricultural sector, dairy, chlorinated chicken, subsidies, any number of these things. And I don't think the Biden administration is going to be particularly excited about doing a major trade negotiation right at the beginning, particularly going to that buzzsaw of domestic agricultural issues. We'll see, maybe there's something will be done there. There'll certainly be a lot of pressure for our, working with our traditional ally, traditionally our closest ally. But it's not going to be something that's going to immediately be coming true. That will impose additional costs for the exporters from the US to the UK, and be sure that check up on any number of issues, including VAT collection and a whole host of other technical issues as you're preparing yours. Okay. Any rate, let's go on. India. India is a country with so many potentials at this point. It certainly is set for a very robust recovery. It may be the world leader in recovery. And what you can see there is that it will be fast growing, but the real question is if the COVID recovery, the response has been poor. We'll see how quickly it can get out and get a vaccine distributed. India does have a number of longer term advantages. It still has demographic growth. It has extensive use of English language, which is already benefit from. And it has really benefiting from the global trade frictions with China. I think you'll be seeing that as the, particularly with the United States back in the picture, there'll be more of the US versus China, the world versus China. And with China becoming a more expensive place to manufacture, plus the trade frictions, India is certainly going to be benefiting from it. It's a difficult market to work in. We had a really great webinar that Michael put together last year with the Los Angeles Venture Association on doing business in India. I recommend that you look that one up, but there's just knowing that market and doing the work going into it is really essential for finding ongoing profits and success there. But it's going to be the market this year that will be drawing attention as it recovers from the COVID pandemic. Russia. Russia is very much still tied to oil to hydrocarbon exports, natural gas, oil, and so forth. Demand for those hydrocarbon exports will be accelerating a little bit this year with the recovery of the economies. But in the long term, there are, there will be decreasing use of hydrocarbons, particularly if we move seriously into various kinds of green initiatives. It's now very much more possible. The United States, to look at solar energy, that's one area that I want to talk about. Solar now has come down to below the cost of natural gas in terms of energy cost per kilowatt hour. So I think that what we'll be seeing there, that it's long-term tied so much to hydrocarbons puts it in a difficult place. The other one is demographic headwinds. There are fewer Russians every year because of the declining birth rates and increasing death rates. And so it's already created a problem. And that translates into a lot of internal uncertainties, both international in terms of its relations and domestic. So this is one of these wild card countries that we need to be looking out in terms of this year. Slow recovery coming out of it, but one where there's a lot of issues potentially on the horizon, and certainly where there's possibilities for sudden, dramatic, disruptive change. Brazil. I think that what we have in Brazil is a moderate recovery. It could have been a lot stronger because of their poor COVID response, but they also still face lots of economic challenges as it simply from the internal corruption, and that translates into their inability to get their fiscal situation under control. Being a closed economy, the deficits immediately translate into inflation. So they are at a point where they can't expand things very quickly because they still remain a very closed economy. So for one there that they'll have slow growth, and one that is going to be very much dependent upon their COVID response. Turning to Africa, the one country I want to talk about is South Africa. It's certainly, you'll see that there'll be a moderate response there. The COVID has hit it particularly hard, and certainly we'll see what the vaccine response is, that they have one of the major variants down there. So the question, hopefully that will be responsive to the COVID vaccine, but that will certainly be the major question mark out there. What I want to point out about South Africa, and what I mentioned earlier about Africa in general, is that the proliferation of ITC, information technology communications, has really enabled the country to leapfrog economic development. This little thing, the phone, is just making tremendous differences all over Africa. And Michael and I had hosted a luncheon a couple years ago with a woman from USAID who had run their innovation fund, and she was telling about being upcountry in up from Mogadishu, in a little village, and talking with about a development program. And the other herd of goats came by, and one of their hosts pulled them aside, and on the side of the goat was tattooed a telephone number. And that telephone number, you called up, you were then tell the owner of that goat herd that I'm going to be buying this goat. And then they took the goat, butchered it, and that was lunch. Okay, so this tremendous amount of information that is suddenly available, the ability to do business, has really caused for dramatic increases in the ability of the African continent to really engage in global business. It's going to be explosive over the next decade. It has been one of the fastest growing areas over the last decade. Expect to see more. And the reason is that there'll be large groups of people who will be able to really access world markets, world economies at this, at this particular juncture. So that's why I wanted to really particularly highlight that. Lastly, I want to talk about the Middle East, Saudi Arabia. The problem with Saudi Arabia, the challenge with all of those areas that in the Middle East that are dependent upon oil as a major part of their economy, is that they need to diversify. And we've been working with a number of countries in the region where they're trying to set up programs to, for example, to use our export accelerator to help their citizens learn how to just to export, what are the best things, how to get into the US market and so forth. In the case of Saudi Arabia, there's a particular problem that there's a lot of internal resistance to changes. They're not going to have that kind of close contact that they had with the Trump administration. But in the long run, these kind of resistance to changes, along with the changing fundamental nature of the economy, is going to another place where there can be sudden ruptures of the political situation, which could spill over into other ones. Again, it's kind of like looking for an earthquake. Changes are coming, pressures are building. It's hard to predict exactly when anything will be helping. But in terms of looking at the Middle East, in terms of an exporter, yes, there are lots of good opportunities over there. Yes, they're looking to diversify away from the traditional oil sector, petroleum sector. So that provides a lot of good opportunities for US companies. Just keep remembering that. So we've gone through the list of the major markets in terms of the economic outlook. I want to shift now to the trade part of it. And for that, I'm going to draw on the forecast by the World Trade Organization, which goes into some of the information that they accumulate from countries around the world and their focus on trade. And as you can see here, what happened was that in the early 2000s, that we had an expectation that there would be this continuing growth of the economy. And what happened instead was that the 2008-9 global recession put a dent in it, but also put it on a slower growth path. And we've seen that again with this recession. So you can see, particularly if there are the phenomena of onshoring continues to occur in developed countries, particularly the United States, you'll see that perhaps the volumes of world trade are not going to be growing as fast as before. World trade will continue. Globalization will continue. There's no question about that. The forms may be changing on that. But I want to get now into their talking about regional changes there. And what I want to particularly bring your attention to is this one in North America. And you think, well, great, that looks great for US exports. And I agree with that. But most of that increase in exports is going to be to Mexico. And Mexico, because of its as an alternative to China, will be particularly strong for its export-led recovery over the coming year. That's why those volumes are going up sharply there. They're still lower than what they were before. Won't be fully recovered, but there will be a sharp recovery there. And to the extent that we have not only onshoring, but also a new mapping out of new trade supplier relationships. And that's going to be most notable in the substitution of Mexico for China for many of the lower end products. The rest of the world will continue to see good recovery. Europe will get back after being particularly hit in terms of exports. That means Germany during the downturn. Generally, you'll see throughout the developing world that expect 6 to 8% growth in the volume of trade. So we're going to have overall, it'll be a good recovery this year. It will depend upon the country and how well that they are positioned going forward. And we'll see from that, internal issues will certainly pay on that. The ability of a country to quickly implement a vaccination program is certainly key for all of the predicted forecasts that we're looking here. Morgan Stanley kind of puts it this way. It's going to be kind of a global synchronous recovery. In other words, it won't be led by the developing world or led by the United States, Europe, and Japan, but it will be this combination going back and forth. So it'll be a very balanced recovery. Again, the key element there is the ability to implement vaccine programs. Upsides, more rapid deployment of vaccines, cheap vaccine rollout in developing countries. It's going to be very difficult for them, for example, all of them to roll out something with a Moderna or Pfizer vaccines that require the cold chain. And certainly coordinated stimulus programs, particularly for green initiatives, could be a potential for a lot of upside growth around the world. Downside, vaccines, COVID, always. We could have relations with China become very difficult. I don't think that'll be the case, but I don't think there'll be particularly warm relations, kind of frosty, but it's still a downside risk. Commodity prices changing. Next one is impacts, particularly traditional retail. And particularly traditional retail is one that has been just devastated by this downturn. As Lou Espen on this, who I see there, has been very involved with the bankruptcy part of the economy, is going to see, expects to see a lot there in terms of the economy this year, that the impacts of the traditional retail sector particularly. Unforeseen events. When we did this a year ago, December, people didn't even know what COVID was. Black swan events happen. It's always, the old adage about, saving for the rainy day. Well, this was more of a rainy day, more of a deluge, and that happens. But that's always the risk with any of these forecasts. Forecasts work very well if you have a relatively stable version of what's to be expected. If it's within a certain margins, either positive, the unexpected things, either positive or negative, make forecasts less valuable. So I want to give you some food for thought. What do I take away from all this? We're entering a period of frictional change, okay? Things will not go back to the way they were before. There have been some fundamental changes in this. And as I mentioned, one of the books I'm coming up talking about in the next slide, Scott Galloway, his key takeaway from this is that the change trends in any industry, any economy have been accelerated by a decade. You know, suddenly overnight, we all had to learn how to be on Zoom. You know, some of us are teachers. I know Stephen started being as teaching. And so we have to suddenly adapt to online learning platforms. There's so many things before that we were talking about. The big trade shows. Yeah, I think we'll still have trade shows, but they won't be as important as they were before. There'll be lots more sort of direct conversations that don't involve that. That has implications for the travel business, for the tourism business, etc. And all these things just changed overnight. So you got to look at your own industry and say, what's really the fundamentals that have been changed, and expect that kind of acceleration of any of the trends, rapid acceleration of those trends. Now, is, you know, the saying about the Chinese character for crisis is combination of challenge and opportunity. And so this is the time to seize opportunities. In helping you think about that, I'm going to just leave you with two books, which I've just recently read that I think are really, if for any of you looking at this, is one by Fareed Zakaria, 10 Lessons for a Post-Pandemic World, and Post-Corona by Scott Galloway. Fareed Zakaria, as many of you know, is on CNN as a commentator. Scott Galloway is a professor at NYU School of Business, very well known for he's a serial entrepreneur. You see him often on TV. Both of them provide a lot of very good insights into how our world is going to be changing, not only business, but the economy. So if you have time, sit down, read those. I listen to those as I go out and walk and use my time out there. Both are great to be listened to. Both are narrated, by the way, in terms of the audible ones by the authors, which is always much more interesting. So what we turn about now is our word from our sponsor, and I'd like Michael to chime in and talk about what we've been doing and what we have coming up for this year and the next couple months in terms of opportunities. Michael?
Yeah, sure. Apologies in advance. My laptop seems to be crawling forward here. So cut me off if I disappear. Keep on. So what we have built for this next coming year, we have our Accelerator program and process and curriculum. It's all online and it's all on demand. So it's at $2,500, it is a fraction of the ROI that a company gets when they make even that first international sale or cross-border deal or partnership or joint venture or, you know, distributor partnership. So in our experience, it's probably a 15x ROI based on the $2,500.
Michael, did we lose you? Okay, I think we lost Michael there with his computer. Any rate, he was talking about the IBA online class. We took our process that we developed for cohorts to be to pass along the tools for international business, and it's we're very proud now that it's online. This has really enabled us to expand our partnerships with international incubators and accelerators. We now have relations in Central America, Guatemala, El Salvador, Costa Rica, Chile, in South America, Nigeria, Ethiopia, Dubai, and United Arab Emirates, and also Bahrain, also Armenia and other places around the globe. We are going to be talking later this in the quarter about an executive masterclass that's aimed for mid-level, upper-level managers involved with economic with the international business. What it is that we're going to take all of these things that have been coming on, moving on the cutting edge technologies that have occurred in the last couple of years. I teach international business. We don't touch any of these in terms of the traditional background in classes and so forth. So this is, for anybody who's a continuing practitioner, this is a quick way to get brought up to it. We're also very proud to announce that probably next month or two, we'll be working with the International Business Incubation Association, or Innovation Association, they now call themselves INBIA, will be designated as the soft landing partner in Southern California, and the only one in California exactly. So we'll be able to access a large number of companies, accelerators and incubators around the world, bring in their best companies to the Los Angeles area and provide them the soft landing experience that they are looking for to get up and to set up headquarters operations in the United States. Some of the events, Michael has been really great at putting these together. With the Los Angeles Venture Association, LAVA, you'll be seeing on Thursday the 28th at 5 p.m. Best International Opportunities for LA Startups with Stephen Chung from the World Trade Center, Christine Peterson from the Mayor's Office, and Taj Eldridge from Lacey, and the who's really been active in all kinds of startup things, startup support in the Los Angeles area. Also, as Michael mentioned, we had that Go Global series. He put the link into it for that. We will be having a follow-up sort of drill down this year to specific verticals as we move forward. So, lastly, we're now up to the point where we can have questions and comments. We have about another 10 minutes to go. We can see some questions there. Some question, there was one that was on Brexit. And the Brexit one is, I think, going to be moving slowly for the UK. As I said, there's a lot of hiccups. You, as the exporter, have really got to work on being up to date with the changes and the regulations. Work with your whoever's handling your logistics, your freight forwarder, or logistics partner. They will have the latest information. If you're doing services, cross-border services, there will be changes. There'll be less guidance on that one. If you have questions, certainly you can call on us and we'll try and figure out the best response from you. It's a fluid situation. China, we are going to see with China, as I say, it's probably going to be the biggest challenge for the incoming Biden administration. It'll probably take them a number of months to develop a strategy. I don't see any sort of overarching theme other than there will probably be an attempt to revive the Trans-Pacific Partnership in its some renewed version and so forth, simply to put pressure around China so that it is then able to put pressure on China to basically to force it to conform to the global norms. So, you know, again, just going back to my own experience, if, you know, with the TPP, I was very disappointed to see us walk away from that. As I mentioned, my first job at USTR, we were dealing with Japan. If we had gotten that kind of a deal from Japan, which I would have thought impossible back then, I would have been ecstatic. And so we walked away from that. We also got extensive market access from Vietnam. And I know that's certainly become a alternative to China and certainly a concern for domestic manufacturers, but it also would have opened up a lot of opportunities throughout the world, if particularly and opportunities in Vietnam. Okay, questions there. You can unmute yourselves, and if you have any particular questions.
Yeah, Chris, not so much a question, but just a suggestion for something to talk about.
Mm-hmm.
What about the risks of inflation? Right now, there's been no inflation because
Right.
it's such a depressed situation, but
Mm-hmm.
we're running huge deficits,
Mm-hmm.
and there's no reason to think that those deficits are going to go away.
Right.
Once we get over COVID, isn't there a risk that inflation's going to take off?
That's a hotly debated issue, and I don't think that there's there's no consensus on it. Certainly, it's been talked quite a bit. People like Paul Krugman and so forth have written on it. I would note, however, that what has happened with inflation in the United States over the past decade is that, or actually 20 years, is that what's happened is that as we've had a very open economy, that we've seen a lot of inflation go to imports. What we do is we consume more imports because they're cheaper. We have the extra disposable income, and there's a higher propensity to import than to consume domestic goods. It's just the nature of the composition of the imports. The other area that we see that is in terms of asset valuation. And so, the cheap money is certainly fueling the stock market prices at this point. So you'll see that kind of assets going up. A lot of the inflation will go there. A lot of the inflation will go into areas that are non-tradables, like real estate, healthcare, and I hate to say it, education. Hopefully we've reached some sort of point on education on that one. But all of those, what I'm saying is that inflation has not shown up in our traditional CPI. It's been mitigated by imports, which are part of the CPI. Imported goods have half the inflation rate of other goods in the economy, if you look back over a 20 or even 40-year period. So it's part there, and part of it will be in asset valuations. That certainly is always a difficult area because the overblown assets lead to bubbles, and that certainly leads to the other kind of financial implications. But thank you, Stephen. Lou.
Chris, what about the cross-border trade between Canada, the US, and Mexico?
I think you'll see that continue to grow. It's certainly a lot of area for specialization. I think there'll be, particularly area that you're interested in terms of ground transportation, that will certainly be growing. I think that'll be a emphasis to get goods moving cross-border. So I think that the USMCA has 90% of the old NAFTA, and the 10% there has generally been a pretty good updating of the things like intellectual property and particularly for e-commerce and things like that. So there's also a lot of potential for development of e-commerce, as well as environmental and some labor issues.
Thank you.
Other questions out there?
So I'll ask another one, Chris.
Okay.
What about, because you and I have talked about this, how are they factoring in the, I've said that COVID ushered in the 21st century, long live the 20th century, it's finally dead.
Mhm.
How are they factoring in more people working from home, not commuting? You have increased disposable income as a result. Business has, they're not renewing leases. They have increased profit margin as a result. Where is that being factored into these economic forecasts, if any?
That's it. It's new. So to be honest, it probably is not interested in it's probably not really factored into the calculations. Okay. So anything new, as I said, it's hard to get in there. It is a trend. I think there's going to be a tremendous overhang in the commercial real estate office network. People are not going to be wanting to return to the traditional office situation. They'll want some of it, and employers will want some of it, you know, a place to congregate. But I think even Scott Galloway mentions in the book, he was no fan of WeWork, but he does think the concept of the WeWork is one that we're going to see more common. People are they're going to be different kinds of working patterns. Again, this is an acceleration of something that we saw before, but suddenly it's gone ahead a decade, just overnight. So yeah, is it factored into these? No. Is it a major change out there? Absolutely.
Yeah, you say it's a decade ahead, but I like to say the 20th century lasted 20 years too long.
Maybe. So good. Any last questions? And if not, maybe we'll end on that thought, because this is really the end of this 20th century, but it's also the time for opportunities. So just going up there, this is the time to seize the opportunities. Okay. So there's a lot of promise out there in terms of the market. It's a growing market this year, particularly for international business. This is the time to be in international business. And this is the time to seize those opportunities. And we here at the International Business Accelerator would be glad to help you through that entire process. So in the promise of keeping this to an hour, I will cut it off here. Thank you all for joining today. If you have questions, please follow up with any of us individually. You can always reach me at clynch@iba.io. And so have a great day, everybody. And
Be safe.
all right, everybody be safe, be well.
Thank you.
Have a good day. Okay.
Thanks.
Bye.
Bye.
Thank you, Chris.
Bye.
Bye.